Kaspa just hit the CoinGecko trending list, ranked 78 by market cap, and it's doing something that almost no other proof-of-work blockchain has ever pulled off at this scale. Here's why that matters right now. When a coin trends on CoinGecko without a major exchange listing, without a celebrity tweet, without a meme attached to it, that's organic momentum. That's people finding this on their own, doing research, and deciding it's worth attention. That's the kind of price action that tends to front-run big moves, not follow them. And if you're watching this before the crowd figures it out, that timing gap is exactly where the opportunity lives. So what did I actually find after 10 hours of digging into Kaspa? Let me walk you through it. The tech, the price case, the risks, and my honest take. First, the fundamentals. And I'm going to make this actually make sense. Bitcoin processes about 7 transactions per second. Ethereum, even post-merge, tops out around 15 to 30 under normal conditions. Solana gets to roughly 65,000 theoretical TPS, but it's had multiple outages, it's not decentralized in any meaningful sense, and it compromised on security to get there. That's the classic blockchain trilemma. You can have 2 of 3: speed, security, decentralization. Pick your poison. Kaspa is built on something called a BlockDAG, a directed acyclic graph of blocks instead of a linear chain. Without getting too deep into the weeds, what this means practically is that Kaspa doesn't discard blocks that arrive at the same time. Bitcoin throws those away. Kaspa uses them, all of them. That's how it's achieving 10 confirmed blocks per second right now on mainnet. Not in a testnet, not in a white paper. Live today. And the roadmap to 100 blocks per second is based on a protocol upgrade called Crescendo, which has been under active development with public GitHub commits. You can verify yourself. The comparison I keep coming back to: imagine Bitcoin's security model, but instead of 1 lane of highway, you've got a 10-lane expressway that's being widened to 100. That's Kaspa. It's proof of work, GPU mineable, ASIC resistant by design initially. And it's doing things with throughput that POW was never supposed to be able to do. Now here's what nobody's really connecting yet. The smart contract layer, called KRC20, is live and being built out. That means DeFi, tokens, and applications are starting to come to Kaspa's ecosystem. We saw what happened to Solana when its ecosystem exploded. We saw it with Avalanche. Kaspa's ecosystem is early, genuinely early, and the developer activity relative to its market cap rank is one of the most interesting signals I've seen in this cycle. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Let's talk price. KAS peaked around 20 cents during the last euphoria cycle and has been consolidating in the 10 to 17 cents range through most of 2024. That kind of tight range after a sell-off, combined with rising wallet counts and ecosystem development, is a setup pattern that shows up before breakouts, not after them. What's the realistic upside? If Kaspa holds its technical edge and the smart contract ecosystem gains traction through 2025, a retest of previous highs around 20 is the conservative case. That's roughly a 20 to 40% move from current levels. Not exciting, but the mid-case scenario, where KRC20 generates real volume and a Tier 1 exchange listing happens, we're talking a move into the 50 cent to 80 range. That puts market cap somewhere between $1.2 billion and $2 billion, which for a working layer 1 with this throughput profile is not a stretch. The bull case, full ecosystem traction, institutional attention, top 30 market cap, $1.50 to $2 by late 2026. That's a 10x from here. Possible? Yes. Guaranteed? Absolutely not. What about institutional interest? Here's where I have to be straight with you. There's no confirmed institutional buying of KAS that I can point to right now. No grayscale product, no BlackRock filing, no Fortune 500 partnership announcement. What I can tell you is that the conversations in POW mining communities and blockchain infrastructure circles are happening. Kaspa's approach to scalable proof of work is being watched by people who care about Bitcoin's long-term limitations. Whether that translates into capital inflows in this cycle is the open question. Now the risk, and this is important because anyone who skips this part is selling you something. Kaspa is still ranked 78. It has no major DeFi protocol deployed on it yet. KRC20 is early, unproven, and could fail to attract developers the way EVM-compatible chains do. The fact that it's proof of work is a double-edged sword. The environmental narrative has hurt POW projects in institutional conversations, and that's not going away. There's also competition risk. Every L1 claims to solve the trilemma. Most fail. And if the 100 BPS crescendo upgrade gets delayed or under-delivers, the narrative collapses fast. Liquidity is also thinner than coins ranked above it, which means volatility cuts both ways. A 30% drop can happen in a day if sentiment shifts. So what's the verdict? Here's my actual take after all of this. Kaspa is one of the most technically credible proof-of-work projects I've looked at in this cycle. The BlockDAG architecture is real, the development is active, and the valuation at rank 78 doesn't reflect what this could be if KRC20 catches on. This is a high-risk, high-conviction setup, not a guaranteed moon, not a rug, but a project where the asymmetry is genuinely interesting if you size it right and don't bet the house on it. I'm watching the 16 cents level closely. A clean break above that with volume would be my first signal that the market is starting to reprice this properly. Don't FOMO in blind. Do your own research, verify what I've said, and understand what you're buying before you buy it. But if you've been looking for a POW altcoin with real technical differentiation and a catalyst-rich 2025 roadmap, Kaspa deserves a serious look. Subscribe to Crypto Sayans. We post breakdowns like this every week so you never miss a move. Hit the bell too, because the next one might be the one your portfolio actually needed.